Chantal, let me know when you start the stream. Okay. All right. All right. Good morning, everybody, and welcome to the U.S. Jobs Report 10-Minute Trades Trade Room. My name is Lee Goldstein. I'm the trading director for 10-Minute Trades. Please remember that all the trades we take are for educational purposes, and it is possible to lose money trading futures, so trade carefully. All right. So U.S. jobs. It's the biggest, probably the biggest, most famous news report, news event that the markets watch the closest. It gives the probably the largest look at how the economy's doing relative to jobs. So it's considered very important. Let me make sure my sound is working. So the ADP report usually has no bearing on this report. The ADP payroll report was very negative Wednesday. Usually I have a thought about what I think the report's going to be, how, it doesn't matter what I think in terms of trading. It's never going to change the way I trade. But my gut feeling is I don't have an idea at all this month. I don't know if there's going to be more jobs or less jobs. They're expecting 750,000 on investing.com. I'm waiting to see what the number is on Financial Juice because I don't really see the numbers yet. Okay, now they're there. I always like to see if they're expecting the same amount. They're not even close. The numbers are not even close. So non-farm investing, I guess they're close. 725 is expected on Financial Juice, 750 on investing.com. I trust Financial Juice. That's the non-farm payrolls. Then the private non-farm payrolls, which is not as important as the main number, is the non-farm payrolls for August. The second most important number is the unemployment rate. If I was going to reduce all of the elements of the report to just two, it would be the non-farm payroll number and the unemployment rate. Usually they agree. Now, the thing that's interesting is last month was 5.4, and they're expecting 5.2. It's hard to get a big move in the unemployment rate. It's not the same type of data, such as the non-farm, the payroll number. The payroll number can be very different. So they're expecting, almost 200,000 less jobs than last quarter. The Thursday unemployment numbers were a little bit better. In other words, there were not as many claims filed. It wasn't dramatic, but they were a little bit better. So, there's clues all through the week about how the report might be. But, the truth is we don't really care what the report says. We just care that the difference between what's expected and the number that's actually released is reasonably different from the expectation. What we don't want to see is the exact same forecast as the news result. That's called matching news. Matching news isn't good for moving indexes generally. So we definitely like to see a difference in the expected result and the real result. That's what always helps to make a trade better. Now we have two different setups that you can trade. I would say they probably have different risk profiles. I think that gold is riskier than trading bonds because it's just more possible. First off, your stop is pretty big. It's a 20 tick stop. So that's $200 per contract. And gold is whippier. Just by its nature, gold can be whippier. But we've been watching, and people trade gold, and it's been working. You know, look, you can see in the journal, gold's been working very well. The moves are very big. The moves are generally quite large with gold. However, gold is lower liquidity than bonds. So, you know, you're not going to get 100 ticks. It's very rare, not in a burst, because it usually doesn't move 100 ticks in one shot. It'll burst, it'll pull back a little, it'll burst back up. Sometimes gold can be choppy. Now, when I've been trading bonds on this report for quite a while, so I'm going to stay with what I've been doing because it's been working. If I personally were trading gold, I would trade more than two targets. So in the setup, the targets are 15 and 30. I would consider, just because I like hitting my first target, so at least I have some flexibility in being able to shrink my stop if I have a profit. I like to make my first target like 7 ticks on gold. So I would not argue for targets of 7, 15, and 30. In other words, trading 3 contracts. I wouldn't argue if someone wanted to trade 2 contracts, 7 and 25, something of that sort. 7, you could do something like 7 and 40, right? And be prepared to move your target if you don't get a really, really big move. There's a lot of different ways, because this report's pretty impactful. There's a lot of different strategies you could adopt for trading this. I personally think so, but it is a report that if you do trade it, there is risk to it because the stops and the volatility on the report is large. If you look at the way gold moves on this report, though, it moves pretty dramatically. So this was last month. Gold is on the right. This is one of those trade room videos. I can always tell because they're very difficult for me to manipulate. Okay, so number one, it's a large bracket for gold. That's because of volatility. You have a shoot down. It's a very large, and see what I mean about it not moving in one shot? I mean, generally this report doesn't move in one shot. And don't get thrown off by Canada. Canada's not trading today. But gold, it's got a large move. It was like half a move, then it pulled back a little bit, and then it kept going. And that's one of the reasons why we have a fairly big stop on it. If you have a small stop on this report, it can easily hit the stop. but it's a pretty dramatic move in gold. Then let's see, June. Here's June. And it's so much news in June with Canada. It was hard to see the gold move on the screen. But again, big move up. The news was negative, 492 versus 600. Generally, bonds go the same direction as gold. Generally, when the news is good, bonds generally move down. When the news is bad, bonds generally move up. Let's look at May. Just fast forwarding to the time of the trade. Gold on the right here. Just a big burst up. Bonds, I had moved my chart a little bit to the right. Couldn't see the candle for a minute. So gold gives you an opportunity for more profit. And when you always have an opportunity for more profit, that means you're willing to take on more risk, because the gold setup is a large stop. Okay, so you're risking 200 per contract. And with bonds, it's, depending on the size stop you use, it's $15. The correct contract clearly today is bonds 12. It's not even up for negotiation. You can't even, if you put a chart on for ZN9, you couldn't trade that chart. The correct chart is 12. ZN 1221. Well, ZN 1221. Gold, GC 1221. Bonds, ZN 1221. So let's say, look, so the DMM says 921, right? We talk about how this is not rocket science. And we talk about how you should have read that DMM yesterday, right? You shouldn't be looking at the DMM 10 minutes before the trade. And well, then I'm not saying you are. I'm just saying in general, the DMM is sent the day before. And let's say you're thinking to yourself, when I put the chart bonds 921, look what it looks like. It's a chart that cannot be traded, right? You can't trade that chart. It's not normal looking. It's not normal looking. So the first thing that should enter your mind is the wrong contract. And whenever it's near rollover, which we are, we're only a couple of days out of rollover, it's always possible that the contract gets goofed up. Now, I don't make the DMMs, but of course, the reason we come in the trade room and the reason I think the trade room is so important, so that if things like that happen, we know early what the correct contract is. And just by looking at a chart also, you know that you can't trade 9. You just know it. You know you can't. So it's important. Very important. Look at the reports the day before. That's why we send them the day before. I'm checking my time sync. My computer's in sync by going to the website time.is. Now, this is a report that lots of different instruments move on this report. For the creative trader, for the trader that likes to, make their own setups, you could probably trade the ES on this report because the ES is going to move. Now, I'm not saying we have a setup because we don't trade the ES generally on this report, but the ES is going to move. We know the euro moves on this report because we used to trade the euro on this report. We know that ZB moves on this report also. All the bonds move. ZF will move on this report. So I trade bonds on this report. There's lots of orders, lots of liquidity. I always use a bracket of 4 on this report. And what I usually do is I like to trade 3 positions. And I like to trade 2 on my first or 3 sometimes, 3 on my second and 1 on my third. The stop is 6. The entry time is 8:29:59. It's a breakout trade. And then I like to label the trade. And I make a note bonds, all right? US jobs. That way I know what the trade is. So I'm just going for my first target, 4 ticks. My second target, let me think about that. I like to go for 7 ticks. And my third target, I go for 12 ticks. I'm a little bit more conservative than the report. So target 1, I'm going 4. Target 2, I'm going 7. Target 3, I'm going 12. So the word is they're thinking that there's going to be more jobs created. That's what I'm hearing in my headset. The tick value on ZN is $15 and change. 15 and change. The tick value on gold is $10 a tick. I don't trade ES because ES indexes in general are very choppy. And just through the history of the company, we never traded the index. We never traded the indexes at all. Never traded the indexes at all until maybe the world crisis began. The bracket is 3 to 4 on ZN. It's a breakout trade, obviously, and I'm make sure your account is set properly. I know that this is a very fast moving report. Be prepared for the unexpected on this report. It can happen because it is very fast moving. Can be. It can be. It's not always, but it can be. So it's like natural gas. It's going to be a fast moving, normally a fast moving report. Now, the reality is, if you get to the point where you start doing your own testing, it's going to be better. You're going to know what's going on so much better. If you practice trading, it's going to be better. ZF is $7.50, I think Chantal's saying. ZN is 15 and change. ZB is 31 and a quarter. And the indexes are trading September. So ES is 9.21. Gold is December. Gold goes to December, the earliest of all the indexes. So if I was trading gold, which a lot of people like to trade gold, you have a big fat bracket, 12. That's a big bracket. The activation, 829.59. Target is 15 and 30. What I was saying before is I like to make my first target smaller. I like that 7, 15 and 30 a lot better. But I don't mess with the stop. I leave the stop at 20. And then bonds, I use a bracket of 4. And I use, you can, if you trade 2 contracts, there's nothing wrong with using targets of 4 and 12, 4 and 18. You could use 3 positions, 3, 9, and 15. I mean, anything within the ranges is within reason. It doesn't have to be exact to what you see. Within reasonable ranges of the yellow line is acceptable, particularly if you do a little bit of your own testing, watching, etc. Now, one good rule always is before you enable your trade, pull up your strategy and check your time. Make sure your entry time is correct. If your entry time is incorrect, you could get filled way before the trade comes out. You know, every now and then you'll see if I make a mistake, the most common mistake people make is they put in the wrong entry time. Maybe you put in 8:19:59. The trade would trigger because it's already 8:19, right? So before you enable your trade, double check your time. 8:29:59, my time looks good. That's why also we have that clock. The clock is gigantic. You can't miss the time, right? The correct contract is ZN12. ZN12. And we've said it before when at the beginning of the trade room. If you look at the 9 contract, there's no way you could trade that chart, right? That 9 contract cannot be traded. The chart looks crazy. So what's the first thing that you think? We're pretty close to rollover. How do you know you're close to rollover? You know how you know? Because during the week when you loaded your platform, Ninja sent a note when the platform loaded. Ninja sent a note that the instruments were changing. That's when you know you're near rollover. When Ninja tells you now, they didn't used to do that, so they're kind of doing us a favor by letting us know when rollover takes place. Time is the way I check my time so that I'm in sync for the report. The other way you can check rollover is there's a little template that I made. If you go to Market Analyzer, it pulls up a screen that has not these exact headings. I put these headings on this little chart. And if I right click and look at ZN921, if I look at ZN921, it shows a -8 under days until rollover. So that's another guarantee that that's not the correct chart to trade. So if you then compare it to ZN12, rollover is months away and the volume is much higher. So there are ways you can check, which you always should do. Everybody should check. Every report should be checked. Anytime you're doing anything with real money, you want to check and be careful, just as nature. So I'm using a bracket of 4. You can use a bracket of 3 to 4 on bonds. And I'm using a target of 4, 7, and 12. 4, 7, and 12. Those are my targets. 4, 7, and 12. Entry time on bonds is 59, 829.59. Same entry time on gold. Gold uses a bracket of 12. I like to use a smaller first target if I'm trading gold, so I would trade 7, 15, and 30. Or 7, 15, and 40 even. 7, 18, and 40 is reasonable. Okay? Gold's moving because it's 5 minutes after the close, and gold is much more volatile. Gold is much more volatile. It's definitely harder to trade. It's harder to trade. I mean open, 5 minutes after the gold open, I'm sorry. Gold is volatile because at 820 is the gold open. That upward move was probably the gold open, a little bit delayed. In other words, gold, when there used to be a pit, opens at 820. I said close by accident, I meant open. But that's a little bit volatile move. 18, 19, 30, it's a lot of ticks. I don't like when indexes move a lot before a trade. I prefer quiet. We all do. And we also see that the markets try to scare you out of trades often also. It's not like they do it on purpose. You know, it's not like somebody's sitting there and saying, well, I'm going to scare traders out of the market. It's just there's often movement that makes you think the market is looking to get you. One of the nice things about the clock that we have is it helps to make sure that you get your time set correctly. In other words, 8:27, right? It's at 8:27, so I know this is an 8:30 report, right? It's an 8:30 trade. I like to turn my crosshair off these days, so I just have an arrow. I know I'm not going to set my time for 9:30, 9:29, because we know we're a couple of minutes away from the trade. So the clock is a great tool. It's really a good trading tool. So there's 2 minutes to go. So in theory, if the news is good, it should drive bonds to the downside. If the news is not good, it should drive bonds to the upside. So that's the story. We got about a minute to go. The big numbers, non-farm payrolls. Financial juice is saying 733. So we want to see, 800,000 would be a good number. 800,000 would be great. That would be a very good number. Or 710 would be a good negative number. You want an offset, you want a difference in the news from what's expected. You don't want the exact same number. That's what we don't want. You don't want the exact same number. So I'm trying to wait. So it pulled back. There's not much I can do. We had mixed news. Gold was the better trade. Bonds were jerky. But my plan is always to hit my first target, to make my first target like so-so in size. So it's a little bit too bad because it just pulled back. Looked like there was some slippage. Also, looking at the news, so you had negative, way negative news, way negative news. And I just tried to protect my profit. It looked like there was quite a bit of slippage this morning also. And so I really just didn't get a gigantic amount of ticks. Not because anything was done wrong, but just because the move was very quick. It had a bit of slippage, and it is what it is. Sometimes you just don't get all, I got my first target. That's really all I got. I really just got my first target. And then it took me out at break even because my stop was moved to break even, and it pulled down. Now, maybe I'll start trading gold again because gold looks like it's just been making more money in general on this report. Did anybody trade gold? Calvin, it was a very fast move, so it's very conceivable that there was no fill because of the speed, and there was a lot of slippage this morning. Why was there a lot of slippage? I believe because a lot of people are already on vacation. There's less traders around. AJ, gold was the better trade this morning. Gold was the better trade. But it was very, very fast also. And just when there's very, very fast market moves, folks, you're just going to sometimes not have a trade. And when there's slippage as well, it's just not going to place the orders. It just can't sometimes keep up with the market. It just sometimes can't keep up with the market. So it's not that anything's wrong. It's that sometimes the market moves so fast. I can't believe I forgot to turn on my recorder. So I can't show the recording until later because it's the trade room recording that I have. But my trade, you could see that there was a very large amount of slippage this morning. It hit my first target. It filled my first target, fortunately, and then it pulled back. It was on bonds. Gold was the better trade. Oh, with the Ninja script output, you don't do anything with it, Jeff, except minimize it. Just keep it available so that if something goes wrong on a trade, you can pull up the output. You can pull up the output. And in the output is all that text about what happened in the trade. If you then really scroll down to the bottom and start reading through it, it actually tells you what the strategy did. So you just keep it minimized. That's all you have to do. Just keep it minimized. All right. So clearly gold was the better trade today. Gold was the better trade. When you get no fill on a trade like today, it's because of the speed of the move. And if it just gets too far away from your orders, you're not going to get a fill. And if you get no fill, usually you should be happy because the worst case is you're going to get filled at the top of the candle, which is the worst that can happen. It's a mystery, Jeff, why things happen in the markets. I wish I could tell you. I mean, you have to thank your lucky stars sometimes. If you get no fill, it's almost always in your favor not to get a fill. Now, if you chose limit orders, sometimes people choose limit orders. Sometimes choose limit orders. And you should never choose limit orders for a trade, especially a fast trade, because the market will jump the limit orders. And the reason that error comes from the stop is the orders are hit, but the stop isn't ready because the move was so fast. And it hasn't placed the stop yet. But gold always tries to scare us out of these trades. I would not have canceled the gold trade. And I didn't say cancel the gold trade either. I just said gold was volatile. I don't like when it's volatile, but it's often volatile. I would still trade it no matter what. I hardly ever would cancel this trade. I almost always would not cancel. I can't remember when I've ever canceled this trade because of volatility. I just don't think I've ever done it because the opportunity for profit is too large on the report. Now I only made looks like I only made I made $125, nowhere near what I was hoping to make. And it's also I was filled after almost the move was over. My entry was way up. It was way up on the candle, unfortunately. Chantal, you had an awesome trade. It was just a very large slippage trade this morning. And there was a fair amount. I mean, the news that was positive is not the impactful part of the report. In other words, the news agreed. The the unemployment rate was matching news. That's not good for a trade. We prefer that there be a difference. Remember, we want a difference in the news. That goes for the unemployment rate, which is a very important part of this trade. The second important part of the trade is the numbers themselves. They were so negative. What we see in news trading is when the numbers are so negative, in other words, monstrously negative, it creates a more difficult movement to trade. That's something that we've noticed over the years. It's better, you'd think that because the offset was huge, that would be better for us, but it's really not. We've discovered over the years that the move is not as reliable when the news offset is gigantic. And today it was gigantic, accompanied by a matching unemployment rate. So it wasn't the best setup. It was not a great setup, ultimately, or a great news result. It was not a great news result for this trade. So there were a couple of small losses, it looks like, and a variety of winners, mostly winners. Couple of no fills, couple of no fills. Sometimes a trade will just jump the orders, Jeff. I mean, it just happens. Sometimes a trade will jump the orders and it won't do anything. When there's low liquidity means there's not a lot of orders available, and on a Friday before Labor Day, on an index like gold, also in general, which is a lower liquidity index, and high slippage. It's like I was saying, I'm always thankful if I don't get filled. It's been my experience over the years that if you don't get filled, it usually protects you from being filled at the top of the candle. And it usually indicates that there's low liquidity and lots of slippage. So it's going to happen on occasions that there's a move so fast. Now, Mark, you can auto move your stop also. I would recommend on a report this fast. Mark made a good comment. I should have moved my stop, okay? Because it hit the first target and it pulled back and it hit his stop after that. Don't forget that there is a feature in the software, target one stop move. You could say, move my stop to break even +2. Okay, and if your target is hit, it'll move your stop to break even +2. And you can also do the stop move if target 2 gets hit. You could do break even -2. You could do break even. Don't forget also you've got the button. When a trade is enabled, you've got the break even button also. It shows up on top. The break even shows up on top. No, you know what, Jeff? I mean, you can put so many things in the software. Eventually, would just bog down the program. Let me think. I'm trying to think. I think there is a way if there's too much slippage. Years ago, let me just think for a second. There was a way that you could use, if the problem is, in order to do that, we had to use limit orders. We had to use limit orders. And if you use limit orders on entries, you're not going to get filled on so many trades that you won't want to trade this way. There's too many fast moves. The markets are faster now than they've ever been, I think, because we're seeing more anomalies, like strange anomalies take place during trades. We're definitely seeing more strange things happen. And I believe it's because the markets are faster than they've ever been in the way they respond to news. And there's moments of low liquidity also. That's why, even though sometimes you might make less money, sometimes it's better to trade the higher liquid instruments like bonds, even though it might mean you might make less money, because the odds of having a more normal trade where everything behaves properly, the odds are better, because when you look at the orders that are available, for instance, on gold, say, now it's after the trade, so the liquidity is very different now than it is the moment before the trade. I'm going to put my chart in sim because I don't want to accidentally enter a trade. But if you look at the liquidity, you look at the dome and you can see the orders that are sitting there. So if, for instance, if you look at bonds, you've got thousands of orders. Thousands of orders. So it's harder to have whipsaws when you have that many orders. Then when you look at gold, look how small the liquidity is on gold. And then you have a lot of people trading gold, right? And then if you're trading MCG, or is it MGC, whichever the micro, your liquidity, it's about the same. I think it's about the same as regular gold, but it's low. And I think that liquidity is particularly low this time of year, this week in particular. Liquidity is low. I don't have MGC in as an instrument, I don't think, for 12. So let me put it in. But look at the liquidity on MGC. It's much lower. I mean, compared to bonds, it's a joke. Really, it's tiny. So you could easily jump orders and not get a fill. When you have 6 orders sitting there, it could just jump and not fill you. There's no point in sending that output, Jeff. I'm telling you what happened. It didn't get filled because there were no orders there. That's what happened. If there's no orders, you're not going to get filled. There's no point in sending it. Honest. I'm not making it up. I'm not making it up. If I don't know why, I'll tell you. I'll tell you. But there's MGC. I didn't realize you were trading MGC on this report. Again, speed. Think of what you're going to trade based on the way a report behaves. And also, you want to think about automation, the way a report behaves. You want to do as little, because you still have slippage. Even though there's high volume and lots of orders, AJ, it doesn't mean you can't still have slippage. And you can also have slippage on the opposite side also, where you get more ticks than expected. Because once you get filled, if it's still bursting, you might get 5 or 6 extra ticks. And this was not an easy report to trade. It went up and pulled back. It was very, very choppy on bonds. Very choppy on bonds. It was not easy to trade. And let's be honest, folks, no one ever said trading is easy. It's just not easy. The hardest reports to trade are the most volatile. They're always going to be the hardest reports to trade. The more volatility, the bigger the move, the harder a report is to trade usually. And, you know, we get spoiled because we've had so many perfect trades. We've had perfect trades. August has been a month of imperfect trades. It's been much harder to trade in August. And August is lowest liquidity month. Weird jerks in the price action. We've seen it all month. And once September rolls around, trade should be more stable. Volume will pick up. So it should be better. It should be better. And it's terrible to say every trade can't be a winner. I say it over and over. It just can't be. Sometimes you can't move your stop fast enough. Sometimes, you know, your first target was small and then it pulls back, hits your stop, and you go from a very fast profit to a loss, right? There's a lot of trades next week, Jody. It's a very busy week next week. Next week, and my boss does not always agree with me, I'm calling the Canada rate statement a family trade. He may take it off, but I don't agree. It's a family trade. 10-year bond, API, 30-year bond, PPI, because it's trading by itself. Trading by itself. PPI is a family trade when it trades by itself. Canada jobs, trading by itself, family trade. And WASD, a lot of trades next week. A lot of trades. And not like ultra scary trades either. You know, they're not ultra scary. Hey, Jeff, I'm telling you the honest truth, when you look at every single person in the room is saying they had high slippage, that means there was really high slippage. And there was, you could see it, because you can see where people got filled. You could see where you got filled on the candle. You see where you got filled. When you get filled high up on the candle and you still make money, thank your lucky stars, right? You thank your lucky stars. Because it's just a lucky break. It's a lucky break. Jody, what did you trade that you lost $15? What did you trade? What instrument? Ah, ZN. Okay. Wow, that makes sense. That makes sense. Okay. I'm telling you folks, in all truth, ZN was brutally difficult to trade today. I'm so sorry I'll show the video in the next room. So we'll be back at 9:30. All right. We'll be back at 9:30. It's only 40 minutes. So heat up your coffee. There's actually 2 events at 9:30. And I got filled, Steve. Yeah, I had a small profit. A small profit. A lot of people didn't get filled because the move was too fast and there was a lot of slippage. A lot of slippage. There were a lot of no fills. A lot of no fills today. It's going to happen when there was a very, very low volume burst. That's what happens. But gold, we're hearing bonds were the problem, not golds. The interesting thing is gold filled. Did anyone not get filled on gold? Not in micro gold, but full gold? Are people saying they didn't get filled on gold also? ZF is the highest volume, Chantal. You know? Doesn't ZF have the highest liquidity out of all the bonds? I believe that it does. ZF has the highest volume and liquidity, if I remember correctly. Now, I know that I don't have ZF even as an instrument to trade. I don't usually trade ZF. So I'm going to add ZF 1221. Okay, I do have it in there. So if you look at the liquidity, now it's after the trade, so you keep that in mind. The liquidity is different at the time of the trade, right before the trade. It looks a little lower actually than ZN, but still thousands of orders. That's very true, Jody. Much better for sleeping to trade the early reports rather than getting up at 5. It's much easier. Fly New York. I used to live in New York. Spent a lot of years in New York. Many, many, many years. My son was born in New York. I had a business in New York for many, many years. Loved it, always loved it there. Tough place to live. All right, folks, I'll see everybody at 9:30. Western New York. So, like, is Syracuse Western New York? Or is that Northern New York? I have to look at a map. New York. All right, folks. Niagara. Slowly I turned, inch by inch. All right, folks. We'll be back at 9:30. So I'll see everybody at 9:30. I should have a video, be able to show a video of this trade. Hopefully I can download it. Okay, folks. I'll see everybody at 9:30. Take care.